Hello everyone, thanks for clicking on my video today. My name is Evan and you're watching Hef Trade. If you're new to my channel, thanks for watching my videos and thanks for clicking on my video here. I do options portfolio reviews and I also talk about different trading strategies, and I am interested in teaching and talking to others who are also interested in options. Please click on the like button and subscribe to my channel so that we can talk and we can have more discussions and you can follow my options trading journey. In this video, we're going to be talking about the Iron Condor, which is one of my favorite options trading strategies. And I'll be talking about 3 pros and 3 cons of trading the Iron Condor. Let's get started. An Iron Condor is a neutral option strategy and allows you to set a boundary in the high part of a stock and the low part of a stock. So the best part about this is that if the market moves up, you could be profitable. If the market moves down, you could be profitable. But your main objective is to have the stock stay in between the upper limits and the lower limits for which you set for your Iron Condor. An Iron Condor consists of 2 separate types of option strategies. The first one is called a put credit spread. The put credit spread is on the bottom side of an Iron Condor, and that consists of buying a put and then selling a put above the put that you have bought. The call credit spread is the other side of the Iron Condor, which is the high side. The call credit spread includes 2 portions: buying a call at the high side and selling a call at the low side. An Iron Condor has 3 cons and 3 pros, and I will get into those now. The 3 pros of the Iron Condor are positive theta. In this case, time is your friend and time is working with you. In the options world, you have the choice to either have time working against you if you are long an option, and you have the choice to have time working for you, so if you are short options. Iron Condors have limited risk, which also means that they have a maximum loss, which is defined by the limited amount of risk that you take. Because you are buying an option and selling an option in one order, that means that the amount of money that you are able to lose is defined by the width of those 2 options. Iron Condors are also non-directional trades, meaning if you think the market is either going to go up only a little bit, going to go down only a little bit, or the market is going to stay sideways, you can make money if the stock stays still. The 3 cons of trading an Iron Condor include: it needs to be traded in a high IV environment. Low IV will result in less credit, and less credit will mean a larger maximum loss. There is limited reward when trading Iron Condors. The maximum profit is capped. That means that you can only make so much money and no more. Again, the non-directionality can also be a disadvantage to the Iron Condor strategy. Markets do need to be inside of a range in order for your Iron Condor to work out. There you have it. Those are my 3 tips, and those are the reasons that I like to trade Iron Condors. I hope you liked this video. If you did, please click the thumbs up button and subscribe to watch more options trading content, and follow my journey with me, Hef Trade. Have a great day.